Hey there. So I wanted to create a video quite quickly. I'm getting this type of question coming up quite frequently at the moment. It's a question saying, you've historically given a tip on a particular stock. Do you think it'll still be okay longer term? I think this question is coming about because there are certain stocks that I've bought that have recovered incredibly well and quite quickly, but there are others that, of course, are going to take slightly longer to reach their full potential, and we can't time everything. Effectively, what we try to do is find stock that are undervalued before the rest of the market realizes that they are, and then hold on to them until the market does realize that they're undervalued and starts buying in to push those prices up. So what is my process for reevaluating stocks? Well, every week, at least once a week, I take each of the stocks in my portfolio and I take a look at where they are with regards to my original analysis of them. So they obviously had some kind of a story to them that I found compelling when I initially invested, and I need to make sure that that story is getting better or at least staying the same. And if it's getting worse, then I need to do something about it. I need to cut back on that stock or exit my position. So I wanted to give you a little flavor of how I do this. It's going to be much quicker than the way that I do it usually, but it will give you an indication of how I determine that whether something is still valuable and has the potential that I initially thought. So taking a look at BIDU. So let's begin with the old charts. The charts are always a good place to start. So I'm going to change it to the week chart just so that we are zoomed out. Now you can see a horrific decline in share price, and at the moment we are nearly 1/3 of the value that the stock price was just 2 years ago. Now BIDU has hit a number of different hurdles, and it's been unlucky as an individual stock, and obviously the trade war started roughly around this period, and then when BIDU started publishing earnings, people realized, okay, the trade wars had a massive effect on their ability to make money, and this is reflected here. Of course, things started to get a little better in terms of that sentiment, but there was still a bit of a lag in the business. The other things that have affected the company are that the Chinese government changed some legislation for internet companies, media companies, and BIDU was very slow at reacting to those changes. So they kind of got in a bit of trouble. And then, of course, we've got the pandemic that arrived early in the year a lot earlier in the year for companies that were in China. So they've hit quite a few hurdles. And if you use sites like Seeking Alpha, and I highly recommend that you do, you can get a pretty good glance of what professional and hobbyist analysts are saying about a stock, as well as any news that's coming out. And there are things such as their executives, that one of the most senior executives in the business has been arrested based on corruption. BIDU's also issued $1 billion worth of notes looking to raise money, which means that there's almost certainly going to be some dilution of the stock in the future, so the stock becomes less valuable. And there are a few other bits and pieces of bad news that may or may not affect the stock. And collaboratively, they have invited the enormous decline that we see on screen. So you can see here that I'm holding on to my investment. It's down more than 20%. Now, why on earth, in the face of all of this negative news, am I not cutting my losses and jumping ship? Let me jump out to what BIDU does. I don't think a lot of people in the West understand BIDU as a company. If you look at their Wikipedia page or the company website, or even if you go to BIDU.com, you might guess what they do, even if you can't read the text on the page. So they are an enormous search engine. They don't have the same market cap as something like Google, but they offer a lot of services that Google does. They are extremely diversified. They make a lot of money out of advertising. So they are a business that is pretty easy to compare with Google and in terms of the services that they operate in the business model. So the story of BIDU up until they hit those stumbling blocks, the big stumbling blocks, I would say, were out of their control. There were some others that they probably could have dealt with better. Before they hit those stumbling blocks, you can see that they were a business that was, despite their size, was still growing very rapidly. A company with a hell of a lot of revenue in the billions, and almost as importantly, growing net income, so growing profit also in the billions. Despite the trade war and that kicked off, we can see that they still managed to deliver pretty good revenue through 2019. Their profit wasn't so good for various reasons. Some of those reasons including a bigger investment in R&D, by the way, which is not a bad thing, especially if it ends up fundamentally changing their business, making it more efficient, or giving them more products to sell in the future. We can also see that their balance sheet was pretty good. So the number of things, the amount of money that they owed versus the number of things that they owned, was they were holding a pretty decent ratio here all the way through 2019. The chart here hasn't rendered very well, but if you look at 2019, towards the end of the year, they were also sitting on more than $500 million worth of cash. Now, when I'm looking at businesses that have encountered some difficulty, so whether it's BIDU or ASOS or VW, I am looking for a few things that de-risk the chances of a recovery. So historically, how have they done? What is their management team like? Do they know how to run a business? Were they doing well before they encountered these issues? And now that they have hit these issues, what are they doing to take corrective action? Do they have a lot of money on hand? Because sometimes a big pile of money is the only thing that's going to get you through a tough time, as you effectively pay to run your business whilst you do the things that take your business to the next level, and as you climb out of the hole that you find yourself in. And then something that is also very important, and I alluded to it earlier, is if you don't have cash, do you have access to debt facilities? Which is, it's good if you do, but if you take on huge amounts of debt, that's also problematic. And do you have the ability to make a big profit, or are you approaching a point in time where you think you can make a lot of profit? Because if you don't have access to a debt facility, or if you don't have a lot of cash in the bank, you can make your own money, of course, or some combination of these three factors. BIDU hits all of these nails on the head. It is a company that runs well, except for the executive that was just fired for corruption. They seem to know what they're doing. The business model is proven. They still dominate the search market and the maps market within their geography, the same way that Google does in the West. They have a decent amount of cash on hand, or they did towards the end of 2019. So I'm eagerly awaiting their earnings, which will happen on Monday or Tuesday next week, to get a bit of a closer look into how the business is doing. I'm hoping that either they've found the bottom of the hole that they find themselves in, or they've even started taking steps towards recovery in terms of earnings as well as sales. So here they're looking like a pretty decent business, but why would I take the risk on BIDU and not just, for example, jump straight in and add more to my Google position? And the reason would be this. So what you can see is that Google is making 10 times the revenue of BIDU. They've obviously got a much larger market cap. But what I'm looking at though is the relative expensiveness or cheapness of BIDU to Google. And the easiest way to do that, not the only way, but the easiest way to do that is to look at the PE ratio. So for every share that you buy of Google today, you are paying this premium of roughly 28 for those stocks. Whereas BIDU, you're looking at roughly half. So BIDU is significantly cheaper than Google is. And if it's able to climb out of the trough that it finds itself in, I think that the potential upside is enormous. Quickly before I go, so I've already talked about the various tools I might use on eToro. There's also Seeking Alpha. I might take a look at what various analysts might be saying about a stock, although I don't put a huge amount of weight in this, but it is good to know. And I would probably also use something like a stock screener. FinViz, for some reason, when it comes to BIDU, the stats are way out. This is very rare. In fact, I hardly ever see this in FinViz. FinViz gives you some of the TA on the stock and gives you some stats about them, as well as any upgrades that might have happened recently. And you can see that some of the analysts are upgrading the stock. And if you have got a bit of extra money in your pocket, you might also want to invest in a Stockopedia license, which will throw all of this information into one page, as well as they've got some indicators that they use to determine whether they think a stock is a buy or not. I wouldn't rely on those alone though. All right, so I've done it quite quickly, but you now know what I do, or a subset of what I do for each of my stock when I try to make sure they are still worth holding, or maybe even buying more of. So in summary, I think that BIDU is looking fantastic at these prices. It's just a matter of time before the rest of the market realizes that and jumps in, driving the price up. Cool. See you next time.